Guys, I'm hearing things from people saying I need to sell everything. I'm hearing from people saying buy the dip. These are two very different viewpoints in the same market. One of our friends of the channel, one of the people who works on the channel, a friend of his told him 2 weeks ago that he's selling everything because he's worried about stocks going to zero. That friend of his is in his mid-30s. He should not be worried about stocks going to zero for two reasons. One, that's ridiculous. And two, he's got 30 years until retirement. So in this video, what we're going to try to accomplish is talking about these different viewpoints, why one may be right and one may be wrong. But in addition to that, it's a busy week for earnings. There's a lot of great companies that are announcing earnings this week, like Microsoft, Apple, PayPal. We're going to go through one of those companies and actually analyze in our stock analyzer tool. Now, even though the market's had a rocky start to the year, we're still at valuations that are very, very high. This is updated yesterday. We're at 95% overvalued. The week before, I think we were 87% overvalued. But guys, at one point, we were even higher than this 108. I think we hit 114% overvalued at one point. So valuations have definitely come down. And remember, there's two ways for valuations to come down. Price reduces or fundamentals get better. In this stock market GDP, the fundamentals are GDP. So every quarter that GDP goes up and up and up, even with a recession, you got to remember GDP can still go up because a recession is based on real growth. That's taking out inflation. You can still have nominal growth, but if real growth is negative, that's a recession. You can still have nominal growth, adding inflation back in to still get real growth. I won't get into technicals there. But then we have our stock market. We have our 10-year cyclically adjusted PE ratio, also 98% overvalued versus the 95 on the other one. Guys, just overvaluation. Now, do I understand a world in which valuations in general should be higher today than they were 100 years ago? Yeah. It took a lot more money to make money 100 years ago. You had to buy factories. You had to build factories. You had to hire tons of employees. Guys, there'll be a day when $1 trillion company is made up of 5 or 10 people. I mean, hell, I think Instagram sold for $1 billion and they had 20 people working there or something insane like that. So these are the things to remember as time goes on. Is there a justification for higher valuations? Yes, as long as the majority of the companies in our economy are high returns on capital and don't require a lot of money to keep building. If Tesla wants to build 10 times more cars, they got to build 10 times more factories. But if Instagram, which is now owned by Meta, wants to get double its size, it doesn't need to double its workforce at all. That's the great, even our company, we have software here, right? If we doubled our software tomorrow, guess how much our staff would increase? 0. If the number of users tomorrow doubled, I shouldn't say 0. Our payroll might go up by 4% at most. That's the difference there. Now, this is the kind of economy you need in order to sit there and say overall valuations should be higher. Now, to pivot a little bit, we have an earnings week coming up. Let me show you guys some of the companies that are coming up this week to report earnings, because last week was a very busy week. And look at this week. Huge week. PayPal, I own stock in. Visa, great place to look to see what's going on in the economy. Coca-Cola, Microsoft, Meta, Apple, Caterpillar. Caterpillar will be very important to look at for the future in the economy. Amazon. Amazon's been struggling lately. I think Amazon is even over the last 4.5 years. And remember, Amazon was the company that everybody said you cannot ever think Amazon not going to lead the market. Well, it hasn't. I think Amazon has only done half the return of the S&P over the last 4 years. What other big names are in here that I want to look at? By the way, it's interesting. I think Domino's Pizza has outperformed Google since Google went public or something crazy like that. It's some random thing like that. Oh, Builder's First Source. Who here loves Bill? I'm looking at Dalton over here, our in-house analyst from Illinois/Iowa. He's in town today, and he loves his Builder's First Source. Guys, big week. Oh, Generac. I own Generac. Brookfield. Where's Brookfield? Right there. Brookfield. I own Brookfield. Remember, oh, right here. Don't ever own a company because somebody on the internet does it. We're here to teach a process. Now, as we talk here, oh, PPG, Coca-Cola. Damn, there's a lot of great companies. Let's talk a little bit about two companies here. Because I own one, PayPal, okay? I owned one, Meta, all the way down. I actually bought it at the low of $88 on November 4th, 2022. But I was foolish enough to sell it at $195, thinking that the rebound from 88 was too fast and it was going to pull back. Whoops. Big lesson learned there. But let's go break these companies down in terms of valuation. Because remember, guys, in the short run, stocks are a voting machine. In the long run, they're a weighing machine. Don't decide that this company is bad because of this. because this lead up could have been for stupid reasons. Just remember, in the short run, it's a voting machine. In the long run, it's a weighing machine. Now, here's what's interesting. This is the start of 2020. Let's look at PayPal. PayPal is literally selling at a price lower than it was on the low of COVID. The low of COVID, they hit $82 a share. It's currently at $65 a share. Let's look at their financials here. For the year before COVID, so they hadn't even received this year-end information yet when the COVID low hit. They did $17.8 billion in revenue. Last year, 31.8. Okay, what is that? A 70% increase, 80% increase? Okay, let's look at profitability. They did $2.46 billion in revenue versus 4.15. So another 40% higher, 50% higher, actually more than that. Yeah. Guys, do you see what I'm saying here? It doesn't mean that just because of that, PayPal is a good value, because it could have been massively overvalued back in 2020. But we're lower than we were in 2020, even though revenue and profit are both higher. Think about that for a second. Again, that doesn't mean that PayPal is a great deal today, but I'm going to do my stock analyzer tool, because that should spark an interest in somebody saying, wait a second, why would it be lower? Even though that's more of that is about making sure you understand that people are emotional and Mr. Market's an emotional beast. You don't take whether you're right or wrong based on what Mr. Market's doing in the short run. You take whether you're right or wrong based on, did you buy it at a reasonable price? Are the fundamentals getting better? And you have to wait a few years, unfortunately, till you see if you're right or wrong. That's the big key. So let's pull up what last time I did PayPal. Last time I did PayPal, I'm going to change my returns to 9%. So guys, we have 3, 5, and 7% revenue growth. Okay? Look at the last 10 years. 9.3. Last 5 years, 10.7. Last year, 13.5. Sorry. Restart that. So guys, we did 3, 5, and 7% revenue growth. They did 15% a year in the last 10 years, 12.5% in the last 5, 7% last year. And I'm hearing people say that PayPal is dead. So much for being dead from this standpoint. Profit margin, I did 12.5, 14.5, 16.5. Free cash flow, I did 16, 20, and 24. I'm going to focus on free cash flow. Look how much bigger it is than profit margin. Now, what's the PE I would assign to this company in 10 years? Well, it's bigger. It's going to be more accepted worldwide. They have Venmo more ingrained in our lives. I put 14, 17, and 20. I didn't go higher. Even though return on invested capital is getting better, I didn't go higher because it is a very congested space. But I do think that they can lead throughout this. I did my 9% desired return. That return is just based on the market. What's this thing worth today if I want to pay the market valuation? But remember, if you buy individual stocks, you need a margin of safety, because we're humans, we make mistakes, and the future is unknown. All of this is based on the future. Every single thing you hear is based on the future. We are speculating to a certain degree, but we're also looking at saying, okay, let's look at their past, look at their future. Are they going to mimic each other? Now, if you'd done that with NVIDIA, you'd have missed out on NVIDIA because it went and skyrocketed, but those are the exceptions, not the norm. So I want you to remember that when we're talking about all this principle-driven investing ideas and investing in general. Yes, there is, people say, Paul, there's speculation in everything we do. Yeah, I get that. I do understand that. But we can also agree that there's 100% speculation in stupid things like Bitcoin versus when you're buying a company that generates cash flow. And if the market for selling that company went away, you'd still have a business that's growing and generating cash flow. Every investment's the present value of all future cash flows. If you don't understand it, you don't invest in it. And most importantly, I already said number 4, but the 5th one, most importantly, a great story can become a bad investment if you pay the wrong price. So what's the right price for PayPal based on my assumptions here? Guys, it's looking pretty decent here. We have a low of 60 to 75, a high of 130 to 190, a middle price of 85 to 120. I think for me, I think the juice is worth a squeeze, but we don't know what's going to happen. Now, guys, I own some PayPal and I want to buy more PayPal. One of the ways in which I can buy PayPal is selling what's called cash secured puts. What that lets me do is it lets me get paid to buy PayPal at a lower price. I did not misstate that. It's exactly what I said. I will get paid by somebody to buy PayPal at 60, 55 at some date in the future. That's a great way. I will be teaching a class on how to sell cash secured puts like that. And if you already own these stocks, how to sell covered calls, which allows you to get paid while you hold a stock. This is called our retirement accelerator. It's literally a way where you could double or triple the money you have in retirement if done properly. We're also doing the biggest giveaway I've ever done during the live stream, and I'll be launching something I've been working on for a long time. That's that retirement calculator. It's packed with everything you need to finally understand options and use them with confidence and not as a speculative play, as a way of buying great stocks at lower prices and a way of getting paid on stocks you currently own. If it overwhelmed you before, this class is a must-see. So click the link in the description below for more information. I'll see you there. Thank you for your time.